Because of the rapid growth of the internet, mobile apps, and e-commerce, the global financial services industry is undergoing a period of rapid changes. And at the center of these changes is Klarna. Everyone loves shopping, but nobody loves paying, especially Gen Z. Well, what if you could buy something now, but pay for it later? If this sounds appealing to you, you're not alone, as Klarna has attracted over 119 million customers to its buy now pay later business, processing 136 billion in customer purchases over the last 12 months. Despite this massive growth, the market has grown increasingly pessimistic about Klarna's buy now pay later business, with shares collapsing 56% since the IPO. The narrative has shifted. We had a lot of the bears making fun of people paying for their DoorDash with Klarna and calling the company a subprime lender. What they miss is that Klarna is transforming into fully fledged banking fintech. But before Klarna, let me tell you who I am. My name is Ray Myers and I run the Global Equity Briefing newsletter on Substack. I have been writing about finance and investing for close to 3 years now and have over 30,000 readers across all platforms. I cover various investing topics and write detailed equity research reports on interesting companies. My goal with this YouTube channel is to bring my finance research to a new audience that prefers videos over long-form text. In this Klarna Investment Thesis video, I will tell you about Klarna's business model and explain all their growth opportunities. Furthermore, I will conclude with a valuation model and explaining why I see Klarna as a potential 5x opportunity. A reminder that this video is also available as a Substack article by clicking the link in the description or the comments. Let's begin. The business model of Klarna is based on a two-sided network that brings together over 119 million customers and over 1 million merchants across 26 countries. Klarna was founded in Sweden but has since expanded to all over the world. It has operations in the United States, Canada, New Zealand and Australia and all over Europe. This network creates a really strong flywheel effect. As more shoppers come to use the app, more merchants want to participate in Klarna's network, which then attracts even more shoppers. Klarna is deeply embedded in the daily shopping habits of its users, processing millions of transactions. This high-frequency interaction gives the company a massive amount of data, which it then uses to make better decisions about who to lend money and how. And this data-driven approach has helped the company acquire millions of customers extremely quickly. As you can see in the chart, Klarna is rapidly growing its active customer base, adding 21 million customers in the last 12 months, despite its already massive scale. Most importantly, the company grew the number of merchant partners by an incredible 49% year over year in Q1 2026. This clearly indicates that merchants are eager to tap into Klarna's massive customer base. Now let's discuss Klarna's core buy now and pay later business. This service allows people to buy things immediately and pay for them over a short period of time without paying any interest. The most popular version of this is the pay in 4 product, where the total cost is split into 4 equal payments made every 2 weeks. This is a major shift away how original credit cards work. A credit card company makes money when a person cannot pay their bill and has to pay interest sometimes as high as 25%. While in contrast, Klarna's basic service is free for the person buying the item as long as they pay on time. This is because Klarna makes money from the merchant, not from the customer. Merchants are willing to pay Klarna around 2 to 6% of the sale because Klarna helps them sell more product. This is because customers who don't have to pay for the product right now can afford to buy more. Simply put, when a store offers Klarna, more people finish their checkout and the amount they spend is higher. Furthermore, Klarna takes on all the credit risk as the store gets paid the full amount immediately. It is Klarna's responsibility to collect the money from the customer, not the merchant, and this is what makes it so attractive for the merchant. In the last 12 months, Klarna's buy now pay later volumes reached $136 billion and an increase of 64% since 2022 and a CAGR of 16.5%. This is really massive scale. And as I said before, Klarna makes money by charging merchants a fee for this service. Average company level revenue take rate is now 3% of the GMV, an increase from 2.5% in 2023. As Klarna grows, it is likely to increase its take rate as its platform becomes more attractive for partners, increasing Klarna's ability to monetize transactions. Consumers really love the Klarna app. and this has allowed the company to partner with some of the biggest names in retail, such as Walmart, H&M, Sephora, Nike, and IKEA. But Klarna is not stopping with its buy now and pay later offering. It has also released a Visa payment card. This card allows people to use Klarna's flexible payment options even in a physical store, not just online. By early 2026, the company had over 4.2 million active card users. This shows that the business is moving beyond being just a button on a website to becoming a tool people use for their everyday spending. While you are probably thinking that to provide over $100 billion in loans to over 100 million customers requires a lot of funding, and you are certainly right. For this reason, Klarna has become a regulated bank in Europe, which allows it to take bank deposits from regular people. As of Q1 2026, Klarna had $12.3 billion in consumer deposits, a 30% increase from the year before. These deposits are a very important part of company's strategy because they are always the cheapest way for a bank to get money to fund their lending. About 90% of Klarna's current funding needs comes from these deposits, but to grow, Klarna needs even more capital. To keep its balance sheet light and avoid taking too much risk, the company uses something called forward flow agreements. In these deals, Klarna agrees to sell a portion of the loan to big investment firms. For example, the company signed a major deal to sell $6.5 billion worth of US loans to Elliott Investment Management. It also has a massive $26 billion agreement with a firm called Nelnet to fund its pay-in-4 products in America. This strategy is really smart because it allows Klarna to earn money in two ways. First, it earns a fee for every loan it starts and manages. Second, it gets to move the risk of those loans off its own books and onto the books of investors. This means that Klarna can keep growing its business very fast without needing to raise billions of dollars from selling more of its own stock. This combination of cheap deposits from Europe and big investment deals in America gives Klarna a powerful engine to fund its global expansion. Well, I already briefly mentioned it, but Klarna is moving into banking, and this is changing their business.
Well, Klarna is branching out the AI-powered global payments network, adding new retail banking services. Coming noting this is a significant step forward in its mission to disrupt retail banking.
The idea is simple. Once a person trusts Klarna with a $50 purchase, they are much more likely to trust the company with their savings and their daily spending, or a larger loan for a piece of furniture. And this transition is designed to make Klarna a much more profitable company. And the data shows that this banking strategy is working very well. In 2025, Klarna grew its banking customers by over 100% to 15.9 million people. This is much faster than the 28% overall active customer growth. This here shows that Klarna can turn a large share of its buy now pay later customers into banking customers. And the great thing for Klarna is that each banking customer is worth more than 3 times as much as a regular buy now pay later customer. While a regular Klarna user might generate about $30 in revenue each year, a banking customer generates $107. These users also use the app much more often, transacting about 28.5 times per year compared to only 10 times per year for the average user. I want you to imagine how much money the company could make by turning a bigger share of its active customer base into a banking customers. Now let's talk about company finance. In 2016, Klarna's revenues were only $384 million. By 2024, it had grown to over $2.8 billion. And this growth has continued into 2025 and 2026. Total revenues in 2025 reached $3.5 billion, which is a 25% year-over-year increase. We now have to talk about the fun part, and that is profits. For many years, Klarna was profitable, but it started losing money in 2019 as it began a massive push to win customers in the US. These losses grew very large in 2021 and 2022, reaching over $1 billion in 2022, as the company hired thousands of people and spent heavily on marketing to take market share. After the tech stock price collapse of 2022, Klarna's leaders realized that they needed to change their approach, and they began a major effort to cut down costs, which include laying off many employees and replacing manual work with automation and AI. And Klarna's plan to cut down costs and change its operating model worked really well in the end. Revenue per employee grew almost 4 times, from $344,000 to $1.2 million. Meanwhile, the number of employees fell by almost 50% from 5,527 employees to 2,831 employees by 2025. And after this restructuring, Klarna is back on the path to profitability. In Q1 2026, Klarna reported a really strong 44% revenue growth, reaching quarterly revenues of over $1 billion. This enabled them to report adjusted operating income of $68 million. This is an increase of $65 million compared to last year when they only had an adjusted operating income of $3 million. Meanwhile, net income reached $1 million compared to losses of $101 million last year. After these earnings, Klarna reiterated their 2026 financial guidance, with the company guiding for gross merchandise volume of $155 billion, revenues of $4.3 billion, and adjusted operating income of $299 million, a margin of 6.9%. Analysts expect the company to deliver a net income of $54 million in 2026. Looking further out, the company is expected to grow revenues with a 19.5% compound annual growth rate till 2028, reaching revenues of $6.2 billion. Meanwhile, operating profit is forecast to reach $850 million, while the net income is forecast to reach $555 million. This means that at today's valuation of $7.2 billion, Klarna trades for 13 times its 2028 earnings. To determine if that's an attractive multiple to purchase the stock, we must look at Klarna's growth opportunities. Klarna has two major paths to continue growing its business: the expanding buy now and pay later and banking. The company is no longer just competing with other checkout buttons, it is competing with traditional banks, credit card companies, and even fintech giants like Amex, PayPal, SoFi, Revolut, and Square. The global buy now pay later market is growing really fast. For example, experts at Markets US project that the global buy now pay later market will reach revenues of over $115 billion by 2032. That is a compound annual growth rate of 25.3%. And one of the biggest growth opportunities is moving up into high value sectors like travel, healthcare, and home improvement. For example, in 2025, Klarna's fastest growing categories were leisure, sport, and wellness products. Moreover, Klarna is also making it much easier for stores to offer its services by partnering with major payment platforms such as Stripe. This means that instead of Klarna having to go to every store one by one and negotiate contractual terms, millions of stores that already use Stripe can turn on Klarna with just a few clicks. The next big opportunity for Klarna is shift into retail banking.
Not as known in the US, but we're a fully licensed bank in Europe, and 30% of our $100 billion volume per year is already debit. So this is a key step in that. But also to your point on the long-term ambition of disrupting the big banks, because there is so much to do, especially in the US where payment fees are still substantially higher than what we're used to in Europe.
In just a short time after launching the banking product, banking customers have reached 15.8 million people and are growing at 101% year over year. A traditional bank might spend hundreds of dollars on advertising just to get one person to open a bank account. Klarna could get its customers for less through its shopping app, and then it can slowly offer them more banking services over time. This low-cost acquisition is a huge competitive advantage that should allow Klarna to be as profitable as old-fashioned banks. To understand what Klarna could be worth in the future, let's build a simple valuation model that looks out to 2030. Here are my assumptions. 2025 to 2030 revenue CAGR of 19%, 2030 operating margin of 22%, taxes and other expenses of 30% of the operating income, and as a result we get 2030 revenues of $8.4 billion, an increase of 139% from 2025. If my estimates come to fruition, Klarna could make $1.3 billion in net income in 2030, and this compares to a $294 million loss in 2025. Next, let's model dilution of 5% per year and an exit multiple of 25, and we get to $67 stock in 2030. That would be an upside of 253% from today's share price of $18.97. Discounting that back 5 years at 16% per year to today, we get a fair value per share of $31.86. This implies that Klarna's share price of $18.97 is trading at a 40% discount to its fair value. However, if instead of a PE of 25 we use a PE of 30, Klarna could reach $100 per share in 2030. That would be an upside of over 5x from today's share price. Can Klarna reach these estimates in 5 years? Well, time will tell. Well, that's it for today. Thank you for watching this video. A reminder that all my videos are also available as a Substack article. You can find the link in the description and in the comment below. Thank you for watching my Klarna Investment Thesis video. Don't forget to like and subscribe and follow me for more. Bye!